Hello and welcome to my channel, The Day Tradester. On this channel, I record the trading activities every day within 2 accounts that I own. And I do this because I'm hoping that I can get people to see your future through different lenses. The first account that I record my trades in and my actions in is a $25 a week deposit account for a retirement account. I opened a Roth IRA about 2 weeks ago, and the plan is to put $25 a week, and that is so I can show people who do not have a retirement account that it is possible to earn wealth over time with $25 a week being deposited into that account. And my hope in doing this is that not only will I be able to show you that you can improve your wealth just with $25 a week, but we can also possibly beat the S&P 500. As I progress through this account over the following year, I plan on making at most 1 trade a day. That will be consisting of a sell and a buy. And all of the purchase, except for my first purchase that I plan on making from this point forward, will be all S&P 500 stocks, whether it's directly into the SPY when we have enough money to purchase SPY, but primarily through a variety of ETFs, all linked to the S&P 500. And the second account that I do all my activities in, for the purposes of this video, are all trades that I make using individual stocks. That also is used primarily as an investment account. However, I do swing trading in that particular account. But in reference to the $25 a week account, my first purchase was 3 shares of silver core metals, and the next week I bought an ETF, TWOX, and then this week I bought SMAX, and you can see that right now all of our stocks have gained in value. And so far, our total gain for all of the shares that we purchased is $4.93. And since we are up, and the S&P 500 is largely going up today, we have no trades to make. So I am finished and completed all of my activities within the $25 a week Roth IRA retirement account. So starting off, taking a look at the S&P 500. This is a 3-month chart with daily candles. Let's zoom in here, take a closer look at today's price action. A few moments ago, I said the S&P 500 is largely going up, and that is even though we have a red candle, we opened higher, we gapped up. Yesterday's close was around just shy of 6,850, but today's open was right around 6,866. So we're looking at a $16 gap up. And even though we have a red candle, even though the bears are pushing us down today, we're still higher than yesterday's close. Now, I did receive some sell alerts this morning. We'll go ahead and start taking a look at the first stock. Now, some of these are going to be sells, and some of these we're going to be placing sell orders because the price has already dropped down below my purchase price. So I'll start off and show you the stocks that I believe I still might be able to sell from making this list earlier this morning. And the first one is going to be J&J, Johnson & Johnson. Now, looking at the stock, you can see yesterday we had price fall below the fast-moving average. And then today we absolutely have a continuation of that move. We're still lower than yesterday's price, so that is a continuation. That's a confirmed opportunity to sell. Current price is $202. And Johnson & Johnson, I will be able to sell 1 book at a profit. You can see we've had a nice little run here. And whenever I have price fall down below the fast moving average and we have confirmation the next day, I'll take that opportunity to try to sell 1 book. And for Johnson & Johnson, 1 book consists of 1 share. I max out at 4 shares. Now I already have 1 share sitting in a sell order, so let's go ahead and see if we're able to sell at 202.64. So at 202.64, the highest priced share that I purchased was $195. So that's roughly $7 in realized gains on that 1 share of Johnson & Johnson. And Eli Lilly is next, LLY. Let's expand this back out. You can see they've had a nice long run, slow upward trend on the first 2.5 months. And then the last month, we're looking at a nice move. We've got 1, 2, 3, 4, 5 down days today. There's really no bad news on Eli Lilly, so this is mostly people taking profits. Zoom back in here, take a closer look. Earlier this week, I had the opportunity to sell because we had price fall down below the fast-moving average, and we had continuation the next day. But I was really hoping that price would turn back around because I was really hoping, my fingers are crossed, that it was just people taking a little bit of profits. And I was hoping that it would have turned around by now, but it hasn't. So instead of selling a share around $1,058, we're looking at right now $1,014. Now, with Eli Lilly, just like with Johnson & Johnson, I max out with 4 shares. So I currently have 3. One is already sitting in a sell order, and I will be able to sell 1 share at a profit. We already have 1 in the active trader. Let's drop down to 10.15.42 and make that sale. Or not. Let's drop it down to 10.15.39. And from 10.15.39 for the highest priced share, I purchased at $9.68. So that is $48 in realized gains. And the last stock that we still might be able to sell something at a profit is Monster Energy Drink, MNST. Expand that out. They've had a nice little run, just a little hiccup here about a month ago. But by and large, the last 3 months, we are in an upward trend with Monster Energy Drink. So yesterday, we had price cross down below our fast-moving average, and we have confirmation. The current price is lower than yesterday's close, so we're hopefully going to be able to sell some Monster Energy Drink. I am currently maxed out with 12 shares, and that's 3 shares for each book. I currently have 1 book already sitting here in a sell order. And I will be able to sell another book at a profit. So hopefully it'll go at $73.61. And these shares I bought at $71.49. Let's drop it down to, let's cancel that, $73.62. So from $71.49 to $73.62, we'll just round that down to $2. So that's $2 for each share. So that's $6 in realized gains. Now, I do have 3 stocks that this morning when I collated this list, they were not going to be able to be sold at a profit. Maybe something has changed. We'll take a look. So the first one is Cardinal Health. All right, with Cardinal Health, again, we'll expand this out. They had a heck of a run from 155 to 205. If you're new to my videos, all of these are day trading activities in here. I also day trade in this account. Let's go ahead and zoom in with Cardinal Health. Now with Cardinal Health, I currently own 2 shares, and if I was maxed out, that would be 4. So I have 1 sitting in a sell order. I was able to sell 1 at a profit on the continuation 2 days ago of the cross of price below the fast-moving average on Monday. Now, I used to take 2 opportunities to sell out of some shares. The first one was when price was confirmed to stay down and below the fast-moving average. The second was when price would also move down below the slow-moving average, and we have a confirmation the next day. And I no longer do that because when we have the opposite move, when we have price move back up above the slow moving average and the fast moving average with confirmation candles, I would buy back in. But then shortly after buying back in, price would immediately turn right back around. And then I'm stuck at purchasing with stocks that I had purchased at a higher price than I would have if I had just held on to this particular sale a little bit longer. So part of this strategy is when I buy into a stock, I want to hold until I'm able to sell at a profit. Now, if I was strictly just doing a swing trading strategy, I would be buying in when we have a cross of the fast-moving average back here over the slow-moving average, and I would not be doing any day trading. But since this is my job, I day trade all of the stocks that I have in my long-term investments so I can make money every day. So that means because I'm day trading, there will be an opportunity that arises when I buy a stock, part of my day trading activities, and price falls before I'm able to sell it at a profit. And because when I buy stocks, I do not plan on selling them at a loss, I will hold them until at some point I'm able to sell at a profit. that's where these limit orders come from. That's where these sell orders come from. But if I was not doing any day trading activities and I just held these stocks until we had the fast moving average cross down below the slow moving average and I just sold them all at that point, that would be a little bit different. So I no longer look for the opportunity to sell the next share at this cross and confirmation. What I've done is I now use 4 charts to help me make better decisions. Let's go ahead and close this active trader on this chart. This is the daily chart. This is a 3-day chart. My plan is to utilize the 3-day chart. Let's expand this out so we get a better look. My plan is to use the 3-day chart similar to how I was using the daily chart and possibly sell when I have a confirmed cross on the 3-day chart of price moving down and below the fast moving average. I recently converted about 2 weeks ago using more charts and taking a little bit longer opportunity to sell, waiting for a larger down signal. So I'm also considering waiting until prices where actually price crosses the slow moving average and we have a confirmation of that move. So it's something I'm still tweaking, even though I've been trading for 3 years and I've been profitable basically since I started. I'm continually tweaking and trying to improve my strategies on within various accounts. But in this particular account, I definitely want to be as profitable as possible because I'm trying to show you as the viewer that you can make money. And I would really hate to be buying out of stocks too soon and then you see that I'm selling too soon and you there in turn get upset because you're holding bags. Whereas if I hadn't sold too soon, we would be selling most of our stocks at a profit, and we would be able to use that money to buy stocks that are actually going up as opposed to holding bags or holding these stocks while price is going down. So I'll be playing around with this, but right now we do not have confirmation of cross below the slow moving average, and nor do we have price going down below the slow moving, or excuse me, I said that backwards. We do not have price confirming this cross of below the fast moving average, and nor do we have price crossing down below the slow moving average. So I'll keep taking a look at this tomorrow and on into next week and see. I'll be making decisions as I actually experience price moving below the fast and slow moving averages on the 3-day chart because I have not been using the 3-day chart. This will be the second, maybe the third week that I've been actually using these 4 charts to make these decisions. So right now we're not doing anything with Cardinal Health. We'll expand back out to our 4 charts. And now I'm looking at CrowdStrike, CRWD. CRWD, CrowdStrike. It's an online security firm. Okay, so what we want to do is take a look at all 4 charts. We can see on the 2 of these charts, which is the quarterly chart and the monthly chart, we have 2 green candles. Price is moving up. However, on the 3-day and the daily chart, we've got price moving down. So let's expand, maximize this cell. So CrowdStrike went to earnings several days ago, and the shares of stock that I had, I believe I only had 1 share, so I took the sell order off. So what I'm doing is going to put the sell order back onto CrowdStrike. So we're looking to sell, and the reason is we've got some downward pressure. Looks like we might be getting some bullish pressure here. But I do just want to go ahead and put that sell order back on. So I have 1 share, and I purchased that at $555.29. So I calculate the first digit is in the hundreds place. It's a 5. 10% of 500 is 50. So we'll add 50 cents to my purchase price. And CrowdStrike 50 cents added to 555.29 is 555.79. So delete that. 555 and 79 cents is my sell order for the only share of CrowdStrike that I own. Now, looking back at the 1-day and the 3-day charts, when we have when we have the fast moving average cross back above the slow moving average, I will consider purchasing back in and maxing out my shares that I would have. And with CrowdStrike, that would be 4. And that would also be dependent on as long as the fast moving average of the 3-day chart is above the slow moving average, that I will certainly buy back in and max out all the shares that I can if I have enough money to. So the last stock is an ETF that we might be putting a sell order on, and that is XLV. And XLV is for healthcare. Healthcare has had a nice move over these last several months. On the quarterly, we have price move and staying above the fast moving average. However, on the monthly, we've got a little bit of resistance here. Let's go ahead and expand this cell. There's a little bit of bullish resistance. As you can see back here, there's usually resistance or support that kind of prevents the fast moving average from crossing one direction or the other over the slow moving average. And this is the struggle between the bears and the bulls. But there certainly are times where it's a clear cross and it just continues down, either down or up past the slow moving average. And right now, this might be acting as a little bit of resistance. Looking at both the MACD and the RSI, they're both largely in an uptrend. We have the MACD is looking pretty good. You see we've got both the MACD line and the signal line curving upwards. Not only that, we have both lines above the midline of the histogram. So this by itself might be a pretty decent indicator on that this just might be a short-term push down. And maybe tomorrow or next week, the fast-moving average will not do anything because this is a monthly chart. So it will not be next week where the fast moving average crosses above the slow moving average on this particular chart. The monthly chart means that these candles take one entire month to aggregate. So we'll keep an eye on this candle. Go back to here. And since on the monthly chart we've got downward pressure, and on the 3-day chart we've got downward pressure, and on the daily chart we've got downward pressure, we will go ahead and set a sell order. With XLV, I currently have 3 shares. I max out at 4. And even though I recently sold 1 share on the confirmed cross of price below the fast moving average, I do want to set some sell orders for this stock, and it's going to be the same with many other stocks because since I just recently changed my strategy, I want to hopefully sell some of my shares that are too high. Sometimes price can spike up a bit before it starts continuing down. And if I'm able to sell this particular share that I'm getting ready to place a sell order on, then that would help me average back out my shares to where I'm not holding so many at a high price. Now, these XLV shares I've been holding for nearly a year, since before Liberation Day was announced. Actually, I just looked. I've been holding on to these since October of last year. And the reason I've held on to these is because that's what happened. I was able to sell out, and then I bought back in when the fast-moving average crossed back above and confirmed above the slow-moving average. And then after I maxed out with all the shares for XLV, which is 4, price turned right back around either that day or the following day, and I was not able to sell at a profit. And that is true with quite a few of the stocks that I own. Some of these I've been holding for that reason since before Liberation Day. I was not able to sell before price dropped because my strategy was not broad enough. I had too tight or too narrow of a strategy in reference to my sell and buy signals. At any rate, let's go ahead and go over into my watch list in this gadget where they're going to set up a sell order, and I'm looking to sell 1 share, and the price, at least expensive price, is $155.25. So from $155.25, we take the 1 in the hundreds place. 10% of 100 is 10, and I add 10 cents to the $155.25, making it $155.35. $155.35, and confirm and send. So hopefully, if healthcare is in a short-term downtrend for the next several days or weeks, hopefully price might spike up, capture this, make the sale. I'll have that money added back to my balance so I can actually be a little bit more productive with that money. And that ultimately helped me get my strategy right. Now, I do have a stock I will be removing some sell orders, and that's Robinhood. It's because price has crossed one of the slow moving averages. So here on the daily chart, you can see price has moved back above the slow moving average. So here's a perfect example of what I've been talking about. I'm going to go ahead and expand this out. Actually, it is already expanded out. in reference to buying back in, and then price just changed direction on me. If we look, you can see where I was able to sell out of some shares as price was moving down. We had price move down below the fast moving average, and I had confirmation, and I was able to sell out right around in here. And then a few days later, we had price move down below the slow moving average with confirmation, and I sold out here. So I was able to sell 6 shares. And another book I was able to sell out here. That's what this arrow is going up to. I was able to sell 3. So I had sold 9 shares in total on this down move. And that worked out beautifully. I had some nice profits from this run all the way up from 109 to 135. So that was some really nice realized gains on that move. But then because I'm old strategy, when price would cross, the fast moving average would cross the slow moving average, and we would get which happened on this candle. And then the next day I had a confirmed move. I bought back in and I maxed out. So I had 12 shares total and I bought 9. And as you can see, price moved back down immediately 2 days later, and I haven't recovered. So I've been holding onto these bags. And had I waited, or had I realized sooner that this wasn't the best strategy, using the daily chart and just using the cross of the fast moving average across the slow moving average as all of my buy and sell signals, I would not be in this predicament. And this predicament is true of many other stocks that I own. So a lesson learned, my profits from this point forward, percentage of the profits on a daily basis will certainly increase, because I'm going to have more capital as we release those funds as time goes by. I will be holding a little bit longer and selling at more stocks at a profit. So if we look at this cross happened on October 31st. That's when I bought these. So if we look at this chart on October 31st, we are looking at 11:19, 11:14, 11:06, 11:03, 10:24. We're looking at right here. Hopefully you can see this candle. If not, I'll go ahead and maximize the sell. So zoom in here. Right here, this candle is right around October 31st. Both of these, price is higher than the fast moving average. Let me put a pin in that. Let me go back. I'm thinking... so I'm working through my process now. Sorry about that. So if we back up and we look at the first stock that I sold, and this stock really wasn't the true cross. This was from a day trading strategy. I just happened to sell at a high point, and price continued to move down for the rest of the day. So the first stock that I actually sold according to the old strategy of having a confirmed cross of the price below the fast moving average would have been this stock here. Sold 3 shares with Robinhood. I maxed out at 4, so that's 3 shares per book, and that was on October 15th. And then I sold 3 shares later on October 17th. So now I want to come down and find October 17th on this chart. 29, 24, 21, 16. So that would have been this candle on the 3-day chart. So now we're seeing with this price, it probably would not be the best decision if to also sell when price crosses and have a confirmed cross on the fast moving average on the 3-day chart. I'd be in a similar situation. So far today, we saw on an earlier chart where on the daily chart, we had a cross that was confirmed below the fast moving average. And we also had price crossing the fast moving average that was confirmed the next day. But both of those would put me in a situation where I sold too soon. Definitely on the daily. I'm no longer doing that. But as I said earlier, I will be looking at charts as time goes by, and we keep looking and buying and selling through stocks through these charts. I will get more information, and this is the second chart that's telling me that even on the 3-day chart, that would be too soon. So maybe I will wait until the confirmed cross of the fast moving average below the slow moving average, where in this particular case, I would have made more profits if I had held onto them longer and sold them at this particular cross, because my purchase would have been back here somewhere at $53. I would have sold out completely, possibly at $110, and I still wouldn't have bought back in yet. So there's some real live strategizing on how to improve my strategy, thereby improving, possibly giving you better information so you can possibly utilize that and incorporate that in your strategy as well. And I'm pretty sure your goal is the same as mine. It's to not just make money and be profitable. It's to be as safe with our money, with our capital, and make as much money as possible. And by improving our strategy, my strategy will help us do that. At any rate, on the daily chart, I have to work with what I've got. I currently have, let's go find Robinhood. I currently have 12 shares. I maxed out with 3 shares for each book. So I only want one sell order at any time when I actually have price above the slow moving average. So I'm only going to have a sell order for 3 shares. Wrong direction, 3 shares. And for these 3 shares, I bought them at $147.07. So 10% of 100 is 10. So I'm going to purchase, my sell order price will be $147.17. 100, 147 and 17, confirm and send. Now when this eventually sells, I will then start using these 3 shares as day trading shares within my Robinhood holdings. All right, now that takes care of everything on the sell side of the specifically receiving the sell orders or the sell alerts rather. That gave us roughly, gave me roughly a little bit more than $1,400. I'll just round that down to $1,400 that I can use to purchase stocks that are going up, that are in a bullish run. But before we go to buying, we want to take a look at my stocks that are going to earnings, and we want to all account positions. And this afternoon on Thursday, I have and I've got 3 stocks going to earnings. It's DocuSign, Hewlett Packard, and Sentinel One. Now, all of these that I own, they are already higher than the current price. So we're going to be removing sell orders on these. So we're looking for DocuSign, DOCU. And with DocuSign, I own 8 shares, and I am maxed out on DocuSign. Now, anytime I'm going to earnings, I look to sell half of my shares. And if I can't sell half of my shares, I will put half of the shares or up to half of the shares in sell orders. So right now, since all sell orders are all shares are sitting here in sell orders, I'm going to remove 4. And it's going to be the 4 highest priced sell orders. So we're going to start with the 98. We're going to look at the 97. Get rid of the 96.26. So today after earnings, if price spikes and it moves up and it captures these, that's great. We'll make a little bit of a profit on these, but I still have 4 shares collecting, compounding and taking gains. The next stock is Hewlett Packard. That's HPE. And I currently own, with HPE, I have 28 shares. And with HPE, I max out at 28 shares. So that would be 7 shares for each book. So I want 2 books sitting here in sell orders. And this particular book is sitting at $26.11 for the sell order. And that I purchased all 21 shares at the same price. Maybe we can see I bought too soon. So if we go back and I zoom in here, what it looks like, I sold 5 shares here on this confirmed cross of the price going down below the fast moving average. Then it looks like we had price move on these candles. At some point, price moved down below the slow moving average, but I chose at some point for whatever reason to wait and sold completely out here as the fast moving average crossed down below the slow moving average. That was a signal to try to sell out of every share that I would own when the fast moving average again crossed down below the slow moving average. That was a signal to sell everything if I'm able to sell it at a profit, and then on the next cross back up to buy back in. And that's exactly what I did here. So So let's scroll a little bit, put it in the center of the screen. You can see we had the fast moving average cross over on this particular day, and we had a confirmed cross the following day, and I bought all 28 shares right here on this day. And then look what happened. Bam, bam, just utter horribleness. And then it just continued. So I want to back it up and see what day this was. This was October 2nd. So we're going to take a look at our 3-day chart. I'm going to take a look at my 3-day chart and find October 2nd. So right here is October 2nd. So I'm going to expand this, maximize this cell. So right around here is October 2nd, right between these two candles. So if I had learned my mistake with having too tight of buy and sell signals, I would not have sold out of my shares so soon. I would have held them until, again, possibly when price is confirmed to be below the fast moving average, or more than likely when price is confirmed to be below the slow moving average, or also looking at the possibility of waiting until the fast moving average crosses below the slow moving average on a 3-day chart. Had I waited there, I would have sold somewhere around in here instead of selling back here on the 3rd, buying back in, and then having this big nasty candle on these 2 days in a row that just immediately dropped us back down while we're holding 28 shares of Hewlett-Packard at roughly $25. So we're looking at 2 months of roughly $700 just sitting there doing absolutely nothing when I would have had that money because I would have made my purchase back here around $16. So hopefully you're seeing the benefit of trying to figure out and improve strategies. This is what you should be doing. Whatever strategy you choose to do, you should always be trying to figure out how to improve upon it. You're seeing me work through my problems live because this is the first day I've actually looked at any charts that would give me any information on the buy and sell signals, the difference between the daily chart and the 3-day chart, or the differences between the crosses, confirmed cross below the fast moving average compared to the confirmed cross below the slow moving average, compared to just waiting until we actually have a confirmed cross of the fast moving average below the slow moving average. At any rate, I need to set a sell order for one more book of Hewlett-Packard. So that's going to be 7 shares. And I purchased, it's going to be the same price as this, which is at $26.11. They were all purchased at the same time, as you just saw. And I'm setting it 2 cents higher because 10% of 20 is 2, and I'm just adding that to my $26.09 purchase price. So now if Hewlett-Packard spikes up before it turns back down, we'll have that money back. Or if Hewlett-Packard just ends up having a great earnings report and just ultimately continues to go up, then we'll be able to make a profit on these. Or at a minimum, price starts going up, and then tomorrow it still hasn't captured that, I'll cancel one of the sell orders. And the last one is Sentinel 1, which is S. Let's see how many shares. I already have a sell order for 5 shares. Let's see how many I own. And I own 5 shares. So in this particular case, I do not want to have a sell order at all. I want to at least have one book ready to take gains, just in case they have a great earnings report. All right, so that's it for all the earnings. That's it for the sells. It's now time to take a look at the buy list opportunities that we received alerts on this morning. I'll go through the list, see what might be the best possible opportunity and the most beneficial stock possibly, and then I'll explain to you why I chose those stocks. Like I said, I have just about $1,400, a little bit more than $1,400. All right, taking a look at some of the stocks, and the first one I'm going to choose to purchase is SoFi. And the reason I'm going with SoFi is a bank. It's an online bank. And next week, Joseph Powell will more than likely be cutting the interest rate. And that possibly will benefit the banking industries. Not only that, we recently have on the daily chart a cross, which is a pretty good signal that this is the beginning of a run. We also have on a 3-day chart a bounce off of resistance, or excuse me, a bounce off of support of the 20-day slow moving average, with price moving back up, so it might just continue on up. And we both have on the monthly and the quarterly price significantly away from both the slow moving averages and the fast moving averages. So looks like hopefully we'll be in setting up for a good move next week after the interest rate cuts. Now with SoFi, I max out at 72. I currently have 36, so I need to purchase 36 more shares of SoFi. So I'm going to pull up my active trader, and we're going to say 36. And the current price is $29.42. I need to expand this. And there we go. We've got 36 shares at $29.42. Now I will remove this book, this sell order for this one book that is set at $32.11. And now 18 shares of one of the books that I bought will become the book that I use for day trading SoFi. Right now, SoFi's price on the 2-minute chart is headed up just a little bit. So hopefully it'll stay green and bullish. All right, so I just got 36 shares. So $36 times, we'll just round it up to $29.50, 29.5. That's $1,062. So I have roughly $350 left to work with. So I'll take a look at American Express. They also would be a beneficiary of a rate cut. And we're already above 350. So I'll take a look at JP Morgan. Instead, JP Morgan, they are $315. They also would be a beneficiary because they're a huge bank. So on the daily chart, if you can't see this, I'll go ahead and maximize. You can see that we had yesterday, we had the cross of the fast moving average above the slow moving average, and we have confirmation of that cross. So that's a good signal. We also have MACD, both the signal line and the MACD line are both moving up above the midline of the histogram. We also have on the 3-day chart, we have also price moving above the slow moving average as well. That's crossing today. So the fast moving average is crossing back above the slow moving average today. And those prices, both the MACD line and the signal line on in the MACD are above the midline of the histogram. So those are all good indicators on that it might be a good idea to purchase JP Morgan, one share. So we're going to pull back into my active trader. We're looking at JP Morgan, one share at $315.19. And there we go. The 315.19, close this. Now I'm going to do the same thing. I have a sell order. I have been day trading JP Morgan, but price moved before I was able to sell at a profit. So we're going to cancel that. And the share that we just bought will become my day trading share. Now that is everything. I have no more money available. This money needs to be left to purchase one of the last day trading stocks I have to buy back into when price moves, turns back up, when it turns bullish on me. So we will take a look at everything that I did today. All right, so I sold Johnson & Johnson, sold an Eli Lilly, sold Monster Energy drink. I ended up putting sell orders on CrowdStrike, the ETF XLV for healthcare, and Hewlett-Packard. We put a sell order on that, and that was due to earnings. We took sell orders off of DocuSign and Sentinel One, and I bought SoFi and JP Morgan. Now, none of these are actual recommendations for you to go out and either buy or sell these stocks. I am not a financial expert. I'm only showing you what I do and that I'm making money, and I more than likely will make money off of these trades as well. I'm showing you my strategy. I'm showing you my decision-making process on when I buy and sell. I'm showing you the decision-making process as I'm working through making improvements to the strategy. And I'm showing you all of this because the overwhelming majority of day traders fail. They lose money. And I don't want you to lose money. I want you to see that you can make money if you are patient. Patience is the key to actually making money in this industry if you are going to be a trader. All right, so I've got 3 stocks going to earnings. I want to pull up my afternoon earnings charts, earnings reports in the afternoon, and we are going to populate these charts The first one was DocuSign, DOCU. Next was Hewlett Packard, HPE. And the last one that we looked at was Sentinel One, and that's an S. And they all go to earnings at 5 minutes after 4. It's now 3:52. So I'm going to keep working and doing other things until it's time. And in a second, we will be ready for earnings. All right, it is now, well, it just turned 5 minutes after 4, so I just missed it by a few seconds, but you can see the volatility of both DocuSign, Hewlett Packard, and Sentinel One. Hopefully they're all good earnings. Looks like DocuSign, well, it's turning green again. We'll just give it a few seconds, and maybe there will be an overall direction for all of them. Looks like Sentinel One had good earnings. They are not going back and forth like DocuSign, nor is Hewlett Packard. So hopefully these are good signs for at least Hewlett Packard. And, well, spoke a little too soon, but the reason I'm showing you earnings is so you can see the volatility right around earnings. This is not a time where you want to try to guess the markets. If you're new to the markets and you're trying to be a day trader, this is one area where you will most likely lose a great deal of money. You do not want to be in the markets trying to guess what direction a stock will go. You can have your heart broken very quickly around earnings time, no matter what stock it is. If you're not prepared for the downturn, even after seeing the immediate green candles, that's exciting. I was excited to see 3 green candles, but now reality hit, and it looks like Sentinel One and Hewlett Packard possibly may be going down. Time will tell. This could also be a fake out here. So keep in mind, as you become a little bit more experienced as a day trader, stay away from earnings. Do not try to guess that. And if you are currently guessing earnings and that's why you're not profitable, stop. Stop trying to make money around earnings. Earnings will break your heart. All right, so we'll give this, I'll be back in a few minutes. We'll see what ultimately is happening with these 3. Okay, it's now 4:40. Wanted you to see what the final results, or at least the current results of these earnings reports are. As like I said earlier, it was a little exciting seeing all of them had green candles. They were moving up, and then bam, they just all turned around. Hewlett Packard is still going down. This one might be turning back up, but you never know. It can turn down and go down another several dollars. All of them can continue down. Don't know what the results currently were. I'm working on finishing the video. So you saw the beginning, and now you're seeing the sort of end of the earnings today for these 3 stocks. So now I want to go back to my daily chart, making our way down to, cancel wrong one, setup. Let's go to 4. Okay, and then we're going to expand this out and take a look at the S&P 500. Maximize the sell. We'll see how everything ended up for today for the S&P 500. You can see that we still ended up closing higher than yesterday's close. So the S&P ultimately went up for the day, even though we have a red candle for the day and we ended up lower than today's open. Also, we had price fall down to 68.26 and then ultimately throughout the day eventually work its way back up. So that is also a good signal for tomorrow. Hopefully that will be a green day tomorrow. Our chart of the day, our best performing chart or stock that we have is UiPath. They went up, it's just Path, P-A-T-H. 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 There we go. We got it that time. All right. Between the close of yesterday and the close of today, UiPath went up a little over 24% today. Closing yesterday right around $14.86 and closing today at $18.48. So that's a $4 increase. And our chart today is a stock that we own. And Path, how many shares do we own? Need to go into all account positions. And Path. All right, I own 22 shares, and I typically, if I was maxed out, I'd have 44 shares. So before we go back to the S&P 500, we'll go ahead and take a quick look at where we are. It looks like the monthly might be moving up above the slow moving average. Can't tell on the quarterly, but on the daily and the 3-day, we have fast moving average above the slow moving average. So we'll take a look at it tomorrow. Maybe we'll be buying back into UiPath and maxing out, depending on the available funds and the other stocks that are possible to purchase. All right, it's time to take a look at my performance for the day. All right, my total realized gains for the day is $336.94, with 105 of it roughly being through the swing trading strategy, the rest being through my day trades. And I made that on $39,440 as my cost basis, and I made 89 trades today. And my new account, which is funded with all of the assets and monies and stocks from the old account, the new account, I am performing at 6.86% compared to the S&P 500 at 7.22%, with the old account performing at 16.26% compared to the S&P 500 at 10.54%. And when we combine the two, my current performance year to date is 23.12%. compared to the S&P 500 at 17.76, which means I am outperforming the S&P 500 by 5.36%. If you have any questions or you would like to have a little bit more explanations, please leave a comment. Let me know, and I will answer them as best I can. And I look forward to answering any questions I may receive on the following day in the next day's video. Thank you very much, and please leave a like, share, and subscribe so I have the opportunity to possibly help more people either enter the markets or to become profitable. If you've seen anything in my videos, please leave a comment, leave a shout out, let me know what that was that you might be able to implement in your strategy and make you profitable as well. Thank you very much, and I hope you have an absolutely amazing rest of your day.